Wall Street just pulled off something it hasn't done in over a month. And if you're not paying attention, you're leaving money on the table. The bulls are back, they're loud, and they just pushed the S&P 500 and Nasdaq to record highs. Let's break down what just happened. The S&P 500 closed at 7,230, up nearly 1/3%. Solid. But the real star of the show, the Nasdaq, it surged almost 0.9% to close at 25,114. That's a brand new all-time record. 5th straight week of gains. 5th. Meanwhile, the Dow dipped 1/3%, slipping just below that magical 50,000 level at 49,499. And here's something interesting on the bond side. The 10-year Treasury yield dropped to 4.38%. That's a notable decline. Money is rotating, and it's rotating fast. So why is all of this happening? 2 words: artificial intelligence. The tech trade is absolutely on fire right now. Nvidia, already the world's largest publicly traded company, is still being called one of the smartest growth stocks to buy. Think about that. The biggest company on earth, and analysts are saying it still has room to run. AI demand is insatiable. The customers buying Nvidia's chips have essentially bottomless wallets. And it's not just Nvidia. Broadcom and Apple are both sitting in buy zones right now. Memory prices are surging too, which is lighting a fire under names like SanDisk and the broader semiconductor space. This is a full-blown tech momentum wave. But here's the kicker. The falling Treasury yield tells you something deeper. Investors are getting more comfortable with risk. They're selling bonds and plowing into equities. The yield curve spread between the 10-year and the 2-year is sitting at a healthy 0.52%. That's normal. No recession alarm bells there. Unemployment is at 4.3%. Stable, not overheating, not collapsing, Goldilocks territory. And on the geopolitical front, a massive overhang just got lifted. President Trump declared the Iran conflict terminated right as the war powers deadline hit. That kind of headline removes a layer of uncertainty that markets absolutely hate. Less geopolitical risk means more appetite for stocks. Simple as that. Now the sentiment gauge is reading 66.6 out of 100. That's solidly in greed territory. Not extreme greed, not euphoria, but confident greed. The kind that can sustain a rally, but also the kind that demands you stay alert. So what's next? Monday brings 2 heavy hitters. The ISM Services PMI and JOLTS job openings data both drop on May 5th. If services are strong and job openings hold up, this rally has fuel. If they disappoint, that greed reading could flip in a heartbeat. So what's the bottom line? Tech is leading, records are falling, bonds are confirming the move, but we are deep into a greed-driven rally and the next test is just 3 days away. Stay sharp. If this breakdown helped you make sense of the market, smash that subscribe button so you never miss a beat.